whether you succeeded and now you're pivoting, or whether you failed, and see it as a preparation for the next step. I think that's it. It boils down to mindset.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I'm excited to have Ellie Perlman. Ellie, how are you doing today?
I'm doing great, Todd. How are you?
Fantastic. And I'm excited to have you on. We've actually tried to do this interview 2 other times. Like, the internet has been horrible. So fingers crossed, we're going to have an excellent, this just sets us up for having the best interview ever, I think. That's all.
I hope so, Todd. You know, we've been doing this for a while for Zoom, and then it was great for years until the entire world discovered Zoom. And now we have to share the platform with everyone else. So sometimes it's great. Sometimes, it is what it is.
It is what it is. Exactly. So a little bit about Ellie for the listeners. She's a real estate investor, owns multifamily properties across the U.S., and you are the the founder and CEO of Blue Lake Capital. And like I said, you do multifamily acquisitions and management, and you help other investors grow their wealth by investing alongside you in your multifamily deals. So that's really cool. You also have a mentoring program, REady2Scale, where Ellie coaches people to become multifamily syndicators by building and scaling a syndication business. So, and then you started out as a scary commercial real estate lawyer, led real estate transactions for Israel's largest real estate company. So that's really cool. We'll have to dive in there. And now, later you transitioned to a property manager role and oversaw properties worth $100 million. So all kinds of awesome experience. You're on the ownership side now, and the CEO actually owning the multifamily versus being the lawyer, being part of a property management company. So take us through some of your experiences and kind of where you're at today.
Sure. I think you summed it up pretty well. I started as a real estate lawyer. I grew up, pretty much with nothing. And for me, the way to get out of poverty was through education, because that's all I got. I didn't have money to put, for a down payment for a property. I didn't have money to go to a fancy, university or college. But I did work hard to get into law school, and I quickly found my that I was basically fascinated with real estate. I don't know what it was about it. Maybe the notion that the wealthiest people on the planet owned real estate. Maybe it's not the only thing they owned, but most wealthy people around me owned real estate, and I thought, I really want to get involved. And so, I used my brains, just all that I had back then. And I got into law school, focused on real estate, and then started my career. After I graduated, I worked really hard to get into one of the largest real estate law firms in Tel Aviv. And I was working for amazing projects. And then I grew, my appetite, and becoming a lawyer was not enough. It was, oh my God, look at what my clients are doing. They're building multifamily and office, and they're buying properties. I want to be like them. And I felt, pretty early on in my legal career, I felt that I can do so much more and I can create something. And I wasn't quite sure how to do it. I thought that at that point that I needed a lot of money to get into real estate. And so I transitioned after several years working as a real estate lawyer, and to basically transition to property management. And people told me, Ellie, are you crazy? You're quitting your job as a lawyer to what? Run after, chase tenants down and make sure that there's no leaking, and what are you doing? But Todd, I was never really good at following, the path that other paved for me or thought that they were paving for me. And I felt that, I want to understand real estate a little bit more. I want to be closer to people. I want to be in a more engaging and energetic, path. And that's where I found myself. And then decided to move to the US. So all of it happened in Israel. I moved here about 6 years ago. That was March of 2014.
Mm.
And I went to MIT. I got my MBA degree because I said, okay, I'm a lawyer. I know how to run properties. I know how to negotiate contracts, but I want to understand how to build a business. I felt that that was the last piece of my education and my experience that I was lacking. So understand better how to read how to read financial statements, how to build businesses, how to raise money from investors. All of that I learned, at MIT. And after graduation, I started Blue Lake Capital and started buying multifamily properties, and the rest is history.
So you were in Israel. You're from Israel,
Yeah.
and you're there, and then you take this big jump to the U.S. Why jump to the U.S.? Why not stay in Israel? Like, what was the reason for the jump?
So since I was, I think, 10 or 11 years old, I've decided that I'm going to live in the US.
Mm.
My aunt actually lived in West Hollywood at that time in California, and she was the only person in my extended family that had some money. For me, she was very financially, secure, and I thought she was very wealthy. She was middle class, but
Hmm.
at the time, the way that I saw her was as a very successful woman, and I think that laid the grounds for my desire to move to the States, because I've decided that I'm gonna make it in the U.S. This is the place for me. That's a place where I will end up. Um, I remember in college learning about the U.S. history and the self-made men, and I said I'm going to become a self-made woman. It's in countries like Israel. Israel is a great country, but one of the things that is very hard to do is to penetrate this glass ceiling. There are, I would say, 10, maybe 20 families that really control the economy,
Mm.
and there's not enough room if you want to grow. And I understood early on that in the US you actually do have a lot. There's so many people here compared to 6-7 million people in Israel. Imagine that you can only stay in New York and that's your country. Now, yes, you can succeed, but there's a lot of competition, and your chances of succeeding, I think, are not very high unless you're born to a certain family. And I was born to the right family, but not to a family that had a lot of connections and wealth. And so it was very attractive to me, the whole notion of self-made man or self-made woman, because I said, I'm going to move there. I'm going to start a life, and start a new life, and I'm going to start, I don't know how, but I'm going to own real estate someday, somehow. And it's, you can't really plan every move. You do what you think makes sense for the next one or two steps. You get there, and then you plan the next one and the next step. And I think some of it is luck, some of it is hard work, um, and basically persistence. Never letting go until you get what you want.
That's so cool. That's kind of what I want to know now is like, that's a big change, right? You took a big risk. First of all, you had this attorney job that, I mean, I don't know what attorneys get paid in Israel, but obviously here they get paid a lot of money. I'm assuming they get paid decent over there.
Yeah. Yeah.
And then you did the property management thing. And then all of a sudden you go, look, I'm going to move to the US. Like, I'm going to give up everything I've got here. And I'm just going to move to the US and I'm going to take my chance. Like, that's a huge step. And most of us will never make and even think about making a step that big, what are some like the mind hacks maybe we can get out of your brain to like use to even have that type of leap of faith? Because there's so many people want that leap of faith just to get into multifamily. Like they're working whatever job and they just want to get into multifamily. They don't even have to move across the ocean. They can do it right from where they're living right now, but they don't. Like what, take me through some like the mind hack stuff.
Yeah. So, Todd, I don't think I've ever thought of whatever I did as, something that I did and now I'm going to throw it all away and
Yeah.
move to the next thing and then it's all going to go to waste. Like a lot of my friends in college, a lot of the people went to law school with me. I know they're unhappy doing what they do, but they don't want to leave because they said, we've put so much time and effort and money into it.
Mm,
You know what, we're going to start all over. For me, it's all about, it doesn't go away. The experience, the education, the connections, it's just, if anything, everything that I've done before real estate, before buying multifamily, was a preparation. And that's how I look at life. If something doesn't quite work the way that I want it to work, then it was a preparation for the next step. There's always something that I'm trying to learn from every experience. If I don't learn anything from it, or if I don't use something, experience, connection, whatever it is in that time frame that can be helpful for the next step, then it was all, for nothing. But I didn't see it this way. And I didn't see any, reason to be in an unfulfilling, job. It's, for me, it was much, much scarier to stay at a job that I actually didn't really like. Um, I can tell you the property management was not what I thought it was. I learned a lot about real estate, but I still felt that it's not it. But I knew I had to stick, and I stayed 4.5 years in that position because
mm,
I knew I have to stay in that position because the next step would be business school, and I need to show this track record to tell a story, so it will be compelling enough so I can get in and then continue and starting a real estate company as the next step, because that was the ultimate goal. So when you're having a hard time where you are right now, if you know it's not going to last forever and you're doing it so you can basically, it will lay the grounds for the next step, it's much, much easier to handle, um, you know, to handle stress or to handle dissatisfaction, because the road is not, people, they look at investors or successful businessmen and they say, wow, they're so successful, it's probably great to be there, but you don't see all the 20,
yeah.
15, 17, 30 years of hard work and
Mhm.
failures and frustrations. And what separates successful people from others is basically what these people did with the frustration, with the failures. If you let it, put you, if you let it drag you down and feel sorry for yourself, or feel that was a waste of time, waste of money, I can't do it, then yeah, it will become waste of time and money and you won't be able to do it. So it is a lot about the mindset, about how you look at what you've done so far, whether you succeeded and now you're pivoting, or whether you failed, and see it as a preparation for the next step. I think that's it. It boils down to mindset.
Yeah, I really love how you positioned that because I think there's a lot of people that exactly think exactly that way where they go, well, I spent all this time and I spent all this money and this is my career choice. And so now I got to stick with it. Where, yeah, you spent a lot of time, probably money, on getting the education. You were now making good money and you gave that up to make the change, but you didn't see it as you're giving that up. You saw it as you're taking the next step. You saw it as you're choosing what you've learned and bringing it forward essentially to the next step in your life and the next learning experience. So that's a totally different mindset than somebody who goes, oh, I'm just going to give up what I did and I'm going to start fresh. Now, you're using your experiences and you're moving to the next level. That's a totally different mindset than giving something up. I love how you phrased, or like just kind of spun it around. So many people like get caught up. They think, well, I spent all this time, all this money, went to college. I have been working at this job. Yeah, I don't like it, but it's making me money. And I spent all this money in college. Like, I got to continue to do it. And you said, well, no, like, that doesn't even, that doesn't translate. You're saying, look, I did go to school and I did get this career, but that's a stepping stone. That's like my path and my journey. And it's only making me a better business owner. And you don't see that you wasted time and money, yet you see it as it's a step, and it's a learning experience. And it's only going to make you a better business owner in the end. And that's such a different mindset than saying, I'm giving this career up, I'm ending my career and starting something else. No, instead you are mutating, you're changing, you're growing into your next journey, and you're using those experiences that you've gained along the way. And that's a beautiful way of thinking of it. And I think it makes that transition for people a lot easier to handle if they can think that way. I love what I've heard from you so far. Like, you're 10 years old and you're like, I'm going to move to the US, and look at where you're at right now. And you're this real estate attorney, and you're like, I want to start buying real estate, and look at what you're doing right now. Like, you've used this as this journey to get you to the position you're in. It's so beautiful. I love the story. That's so cool. So take me through, getting here. You went to MIT, I think you said, right? And after that, you're done. What was your steps into real estate?
So back at MIT, I actually took real estate classes, underwriting classes, and other classes related to real estate, but also related to entrepreneurship.
Mm-hmm.
And that's basically how I approach my business. I approach it like a startup. But when I was there, I was very interested in technology also, because MIT is a great school for entrepreneurship and technology. And I learned how to run a lean business. So how can you establish a business from the grounds up without spending a lot of money on payroll and other expenses, but kind of move that, create a company and get the ball rolling and generate cash flow without spending a lot of money. And the interesting thing over there is that during the summer, I actually joined a startup, and and I say we, it was, I was part of the executive team, but the owner and executive team, we raised about $5 million during the summer. And it took, it was 45 days. When I started, the company was about 12 employees. And by the end of the summer, we were, I think, 32 or 33 employees. And that also helped raising the capital when they saw that how many, people were working there. And I learned a lot about how to pick the right people, how to instill motivation in them, even though they don't get paid a lot, because at the time it was a startup. And right after college, that's not college, that was degree number 3 for me. So right after I graduated from MIT, I moved to California, and I worked at a startup, and I wanted to start buying real estate, and I was still thinking about how do I do it. It was still not very clear to me. I made a very easy, very comfortable job, 6 figures. You're starting work at 10, you're home by 4. You have so much time. And for the first time in my life, I was actually making money without working that hard. And that was very strange to me. And I starting to feel also uncomfortable, because what do I do with all this, free time from 4 p.m. until 7 a.m. the next, or 8 a.m. the next morning? What do? I can't just sit and go to the beach or watch TV or whatever it is. Like, I have to do something, because I had so much energy, and I wanted to do something.
You
And I
could
started to look at,
have done that though, like
yeah,
the rest of
but
society.
Todd,
You just
it's
couldn't.
it's so boring. It's
Yeah.
so boring. And I think life has so much more
Mhm.
than to just work the 9 to 5 and spend,
Yeah.
whatever hours you have on hobbies. I wanted to create something meaningful. I wanted to create a legacy,
Mhm.
to my future kids. At some point they're gonna arrive, and I wanted to create something that they'll be able to take part of. And I think it was about a year after I moved here, I started Play Capital. And again, it's always, there's no, the road is not very short. When I say, okay, I want to become a multifamily owner, okay, this is how I do it, 12 months go. It was kind of checking and seeing, how do I get there? And I actually remember taking a piece of paper and saying, okay, where do you want to be when you're 50 years old? And what net worth do you want to have? Okay, great. Now, how many assets? I'm trying to translate it to the number of assets you want to own.
Mhm.
Okay, I know where I want to be in 50 years. Now, I had about 15 years to get there when I started that calculation, or anywhere between 14 and 16 years. And I reverse engineered it, and I said, okay, what do I need to do every year? And of course, it's not linear, right? But what do I need to do every year? How many assets do I need to purchase? And I basically reverse engineered it to how many assets I need to buy in the first year as an investor. And I had a number, and I said, okay, now how do I do it? And I looked into fix and flips. And I realized that that's not really what I wanted, because you're buying and you're getting rid of the asset. You're making
Right.
some short-term profit.
Yep.
And some people, they like fix and flips, and that's great. It just didn't sit well with where I wanted to get to, with my end goal. And then I said, okay, so I understand I want to hold on to properties. Now, what properties do I want to own? And I started looking into single family homes. And I even started driving for dollars. I don't know if you heard that
Oh yeah.
phrase. And I went to Inglewood, which was kind of, some areas are kind of up and coming. And I started to drive around and try to locate some properties I want to buy and renovate. And I was on my way to a conference that teaches you how to buy properties at a discount, how to buy single family homes.
Sure.
And I was listening to a podcast. I was listening to tons of podcasts at that time. Like, I was so thirsty. I wanted to learn. And I heard this podcast, and the guy on the podcast was saying, it was a single family home podcast. And they interviewed someone who was talking about multifamily. And I remember sitting there, and he was talking and talking, and basically saying, you're thinking too small. Why buy one or two or four doors like duplexes? That's too small. 40 units, 70 units, 200 units. And I remember sitting in that parking lot and waiting for the podcast to be over. I could have paused it, but I had to hear what he had to say. And I arrived late to that conference. I was sitting there in the parking lot listening because I was fascinated. And this is when it hit me. And it's like, some people say, when you see someone, the first moment you see them, that that's the one, which I don't believe in, by the way, because there's so many layers to a person you cannot tell just by blinking at them for 2 seconds. But
Yep.
that's that's a different conversation. But that's what happened to me in that podcast. Since the moment he started talking, I said, that's it. That's what I was looking for. And
Mm.
that's what I started doing. I started looking into it. I paid a lot to educate myself, to learn how to do it, to kind of learn how to approach investors, how to buy the best, properties, how to renovate them, how to push income. That's how I got into real estate,
That's
basically.
that's cool. And so, look to the listeners that it doesn't have to be a straight line, right? It
Mm.
does not have to be. And I tell so many people, like you might start out thinking that you're going to do single family houses like you did, or maybe you'll even start doing single family houses, but that doesn't necessarily mean that's the only thing you're going to do and that's the end game. But you you know you started in this journey, you knew you were going to do real estate at somehow, some way, capacity, and then eventually multifamily hit your brain, and it made so much sense. For me, it was like I was single family. I was in single families. I was actually doing them. I was buying them. I was flipping them. I was keeping them. And then all of a sudden, like this multifamily, like, oh, hit my brain. And it was like, I need to stop and completely transition. And it just, you can always pivot. You can always change, but you got to continue to educate yourself and continue to take action as well. So, I want to go back. You talked about tips on starting lean, and you approach your real estate as a startup, or when you started, you approached it as a startup, which I think is really important. A lot of people, and that's one of the kind of the main themes on this podcast is so many people, we talk about the nuts and bolts of real estate. We talk about, NOI and cap rate and all that kind of stuff. But we don't talk about it's a business that we're operating.
Mm-hmm.
And you, in my opinion, at least our short conversation here, is you've set yourself up truly as a business. So talk to us about the tips of kind of starting lean. Like, how do we start lean yet be able to scale?
Yeah, absolutely. And this is a big part of my mentoring program. That's why it's called Ready to Scale. You have to start and set up the foundations to scale, even though you don't have to have 50 or 100 or $200,000 to spend. And the way that I did it, it's pretty simple. There's no magic formula. You sit down and you write the different steps when it comes to doing whatever you do now, because I'm assuming when you start, you're kind of trying to do it all on your own, which is another mistake.
Yeah,
But let's say you
absolutely.
say, okay, I need to find deals, and I'm also raising money. So when it comes to finding a deal, what are the different steps? Sourcing deals, talking with the broker, then underwriting the deal, then walking the property. So all the different steps. Do the same with capital raise. Maybe to raise capital, you are writing content on social media, scheduling meetings with incoming leads, that investors that visit your website, and then do a follow-up and maybe send them an email or whatever it is. Just write down the different steps and now look at it and say, okay, where do I have to be in which of those boxes? Because some things, at least at first, it's very hard to bring someone instead of, so if you're focusing, let's focus for a moment on the acquisition part. If you're making the decision whether to buy the property, sending one of one of your employees, or a contractor, send them to walk the property and decide for you, that's pretty hard. So walking the property is something, for instance, that you decide I'm going to do this. But
Especially to start
sourcing
with.
deals, exactly.
Yeah.
Yes. And I'll say that when I started, I actually did everything for a while just to understand what it takes to do each and every of those steps. So I'll know who I need to hire. It becomes much clearer once you do that. If you didn't run a full underwriting from start to finish, you don't know maybe that you need someone with super strong attention to detail, someone who maybe can also build underwriting models, because you're changing your models from time to time.
Yeah.
Um,
Yeah.
so basically that's what I did. I decided where I'm staying and where I'm actually outsourcing and bringing someone to do it for me. So sourcing deals doesn't have to be me. You can have an analyst, running initial numbers or looking at deals, on scrape the internet, or that's the first step. Now, the second step, after you decide where you want to stay and what you want to outsource, you basically hire people to do that for you. And there's a way to do it on a budget also. There are certain websites where you can hire people, part-time and pay them by the hour, for instance. And some are going to be happy to do it without pay if you give them a little bit of equity if you close the deal. And I always say that equity is the most expensive, you know, form of payment you can have. But if you absolutely don't have money to pay someone, you can give them a little bit, piece of the equity, and they can underwrite deals for you.
Right.
So that's how you can create it. And lastly, you gotta find the right websites and tools that can help you streamline the process. So for instance, we're using Airtable, which is free. And we have the entire acquisition process there. So we have 16 or 17 different steps, and everyone knows when, which steps it's their responsibility. So when someone finishes a step, they kick it off to the next person. So it's basically 1, 2, 3, 4. So every morning I log in and I'm looking at Airtable. I know that, okay, I need to look at 3 deals that are in certain stage, and then 2 deals on a different stage, because I'm in charge of stage, 3 and 7, for instance. So that's, kind of creating the platform that allows everyone to see where all the deals are, at all times. That's very crucial if you're creating this syndication or any, real estate investment company. So everyone has to know where each deal is in the pipeline so they can push it forward.
Yeah, that makes a lot of sense, and allowing everybody to see it, like you said, and you can see where it stalls out. You can see if there's any problems along the way, and you can see how it's progressing. I think that makes a ton of sense. I really like that, just writing those steps down and deciding what to outsource. And the other thing you mentioned is doing everything yourself is okay to start with. One of the important parts, and I've been stuck doing this. I don't know if you get stuck sometimes. Sometimes we keep it for way too long. We don't delegate it. We just, because we're so good at it, right? Or we think we're so good at it. We might not even be that great at it. We just think we are, like we are the only one that can do this. So we like hold on to it and won't let it go. Like, how do you know when to let it go?
You have to put an end to it pretty quickly. Even if you are objectively the best at every aspect of the business, it's never going to become a business. You're going to be self-employed, not a business owner.
Yeah.
You cannot do everything, and you have to be okay letting go, even if it's going to be 80 or 85%, not 100%, because in your mind 100% is exactly how you would do it. You have to be okay with things being done not exactly the way you wanted it, you wanted to, things to be done. And I've been through it too. I mean, I wanted things to be done a certain way, and I'm a type A person. I have a type A personality.
Right.
I like things to be done a certain way. To have to be, top level, no mistakes. And you really can't. You can buy a few properties this way, but you can't scale. It just doesn't scale. And I would say, look at all the successful people out there. Look at Sam Zell, for instance, very, very well-known, real estate investor, but not even in real estate. Look at, every successful businessman and business owner. They never do everything
Yep.
from start to finish. A lot of consultants do, and then the question is, who do you want to become? Do you want to become the Elon Musk of real estate, or do you want to become a consultant? Answer this question and then be okay with whatever you do, after you answer yourself. But you just can't think too small. You have to understand that the people who reach to the top, that's not the top for them, by the way. It's just another milestone. But those who we think are at the top, they learn to let go, but they were also willing to pay for for top talent to
Yeah.
do the right thing, to do the work. But you have to compare yourself, and maybe not compare yourself, but you have to be inspired by people who, have reached to the top, and try, what would they do in your position? Would they still scrape the internet, or, run the initial underwriting, the numbers? No, they would
No.
focus on growing the business. They would focus on closing more deals, so you can have more cash flow, so you can hire people that can help you bring more deals, and that's how you grow it. So
Yeah.
it's looking at it as a business, not as a real estate investment, company. It's a business. It's a business you need to grow and scale. And if you look at it this way, it boils down, it will boil down to, I have an hour now. Am I going to chat with the family office that can bring $10 million to the next deal, so I can do more deals in a shorter period of time? Or do I look for deals online and try and see which one are in the right neighborhood?
Yeah. 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 Definitely. Such a big difference in how you can spend your time. And like, if you're always looking at what's going to grow my business, right? What's going to bring my business to the next level? As you said,
Mm-hmm.
you can't focus on just everything. It just doesn't work. You have
Yeah.
to pick and choose what you're going to spend your most important hours of your day. And again, maybe you say, well, I can't give up the underwriting. Well, maybe you don't have to give it up 100%, but maybe you can give up, as you said, like 85% of it. Somebody else does it. They check all the boxes and they go, hey, here's a deal that meets our criteria. And then you go, okay, I'm going to take a look at what they put together. And
Mm-hmm.
that way you don't have to look at the other 75 deals they looked at and they
Exactly.
threw into the garbage can, right? Because man, that's a ton
Exactly.
of time. And anybody else who's listening, how much time underwriting a deal takes. Holy cow, I mean, you save a ton of time. Just one thing simple like that. And then we can multiply it by the other million tasks that have to be done. So what's a mistake that you've made along your journey here that you can share with our listeners, and how did you learn from it?
Whew, choose only one. Okay. One of the mistakes that I've done, I think, well, when you just start buying real estate, one of the main mistakes I think most people make is just assume that things are going to work well and work as planned, and things cannot be, this statement cannot be, more wrong. I mean, it's just, expect the unexpected, and you have to be okay with things being fluid. You have to be okay with, um you know changes in financing and in occupancy, and all of a sudden you have investors that drop out. It's Things always change. If it were that easy, then many more people would have done what we do, and it's not. And not everyone is built to deal with the stress that comes with it.
Yeah.
So I think just assuming that, okay, I bought it, it's on a contract, in 2 months, easy, we're gonna close. Maybe not easy, but I know how to make sure it closes. And then you have all kinds of things that happen that you don't expect. You can't let it deter you, because that's the nature of real estate. There's nothing more real than a building that is there, that you can see and touch. But it's so, unlike the foundations, there aren't many things that are stable in a deal from the moment you look at a deal you know until you basically complete the transactions. And even after closing,
Yeah.
things change. So just be okay with things being fluid, and understand that this is part of business. This is part of life, and you just have to focus on the solution and the steps you can take to improve the property, and not focus on the fact that, oh my god, I have this huge, unexpected thing that happened. Why am I even dealing with it?
Yeah. Well, and part of it too comes down to planning. I see it so often. I'm sure you do, newer real estate investors. And I was guilty of it myself. I just assume that everything's going to go right, and we don't plan on that unexpected. And when you don't plan on the unexpected, you get caught with, in a bad position. And that's how people get burned. And,
Yep.
luckily enough, in my beginning days, it didn't completely burn me. But a lot of people did get burned, and you've got to plan for some of that unexpected too. You can't think, as you said, you can't assume everything will go right. It's just not going to happen.
Yeah. That's the only thing that is certain, that things are not going to work as planned. That's for sure. That's for sure going to happen.
That's awesome. Yeah. So we got to wrap up here, but I got a couple last questions I want to ask you before we do. First of all, what's a favorite book that you can have our listeners take a look at?
So actually two. One of them is a book by Gary Keller called The One Thing. And it teaches you just focus the first part of your day on the one thing that is the most important thing for the success of your business. Forget about all the other noise. And that's how you're going to, grow your business and see, a huge difference. And the other one is Am I Being Too Subtle by Sam Zell. And it talks about his journey and how he started. And as you can see, nobody plans on becoming, an owner of a huge portfolio by buying the first door on day one. There's always unexpected, ways and how I thought it was a very inspiring story. And I enjoy, listening to him, speak. So these are two of my favorite books.
Awesome. I've read both of them. I love them both. The One Thing, it's such an easy concept and so hard to actually implement into your business. You truly have to focus on it. And even then, you lose focus and you have to I gotta focus back on that one thing. So what are your 3 pillars of wealth creation?
First one is consistency. Have to be consistent and power through. The second one is the right kind of combination between pessimism and optimism, because you got to be optimistic about your abilities to execute and close the deal. But you have to be, when you're looking at the underwriting, you can't be optimistic. You have to kind of assume worst case scenario to stress test, the numbers and see if it actually works. So it's kind of, plan for the worst and pray for the best. I would say that's the second one. The third one is have a higher why. Just making money will motivate you to some extent, but when things are hard, when you're burnt out, if you don't have kind of a higher purpose or kind of a much deeper motivation, you will suffer because it's hard. Buying and managing real estate is hard. Managing people, managing companies, it's hard. And if you don't have a good reason to get up in the morning and keep, pushing through, it's going to be a very, very unpleasant experience for you.
I've got it. I never, that's that's my last question, but I've got another question now for you. So I'm throwing some extra stuff in here. You mentor people. Between the people that you mentor, what are some assumptions that you hear or that maybe were in your mind that just aren't true about real estate, about operating a business? People are like, oh, this part is going to be easy, or oh, I need to really focus on this part. Is there anything that you kind of hear a lot, see a lot, or have thought in your own mind? You're like, yeah, that's just not accurate. Or maybe there's just.
Let me think if there's something. Yeah, I mean, there are several of them. I think the main one was, I don't have experience. Why would anyone invest with me? Why would passive investors invest with me if I don't have experience? That's a big, I think, hurdle for many students, because it's kind of the chicken and the egg. You
Yeah.
gotta have experience so investors follow you, but how are you going to get experience if nobody's going to follow you? And I always say, hey, the solution is just to find someone with more experience. And now, you invested time and money and energy into learning how to do it. There is some value that you can offer to them,
Yeah.
partner up, and then your lack of experience is not relevant. And then and that's what I did, by the way. That's how I started. And then every deal, my role and my GP percentage increased. And now, we do everything from A to Z. But at the beginning, it wasn't for me. Am I getting 5% of the GP, 20%? Am I going to get X dollars out of it? I didn't care. All I cared about was starting out.
Yeah.
And that was kind of the mindset that set me for success, because there was no ego, how much I'm getting, how much he's getting. Doesn't matter. Just get my feet wet and start building the, kind of the reputation, that I wanted. And so I also think that's another kind of issue that I see with a lot of people who are starting out. They're too focused on how much they're going to get paid,
Hmm.
how much. And I've seen it over and over. When someone, doesn't matter how experienced they are, when they're focused on how much they're getting out of the deal, they are always kind of staying, their success is kind of limited to a certain level.
Yeah.
Those who didn't care about it, I've seen some people with very, very impressive, growth. And that was part of it. They didn't focus on how much they were making and then try to adjust what they're going to put in the deal based on how much they were getting. They just gave the best that they've got, regardless of how much they actually got, as a compensation or equity. And these are the people that shine. These are the people that others wanted to partner with. And these are the people that actually, succeeded. So I think that's another common mistake, is to focus on how much you're getting when you're just starting out, and try and kind of match your level of effort with how much you're getting, which, I just think it's a mistake. Show people what you can do. That's the best, in my opinion, that's the best, argument, the strongest argument. If you want to get more, a bigger piece of the GP, a bigger piece of equity, show them what you can do. Don't try and match your efforts with whatever you think you're getting get paid, because that's kind of, it's a very limiting mindset.
Yeah,
And
for sure.
just this mentality is not going to set you up for success.
Yeah, absolutely. Absolutely. I mean, yeah, focusing on what you can bring to the table versus how much money you can get out of that table. Like, just a big difference in your mindset. And look, you might not have experience, you might not have the money back in you, you might not have any of that, but if you bring the skills that you can to the table, you're going to start gaining that. And if that's your main focus when you began, sounds like, was making sure that you're getting the experience, right? Partnering with the right people to then leverage, you're leveraging them, you're leveraging their expertise. Quite frankly, you might even have paid them for that, right? I mean, but you got probably paid a little bit of money, uh,
Yeah,
but you didn't
not
focus
much,
on that, right?
but
But it didn't matter because
it
that wasn't the
exactly.
purpose. The purpose was being able to get the experience, being able to grow, and then now, you know, come a few years later, is you're in a totally different position than you were when you started day one. So
Yeah, and that's a strength of starting from the end and knowing what your end goal is. Because I knew I got to get to X amount of dollars in net worth and Y number of doors in 15 years, in 2 years, 1 year. I have to do the next deal and the one after the few first deals so I can get started. I didn't care how much they paid me. It was all about getting, um, you know, just getting my foot in the door and doing more than I'm anticipated. It's just like a syndicator that, we project, let's say 7% cash on cash. I want to pay 8. I want to
yeah,
pay 9. You know, it's the same thing. I'm not sticking to exactly what I'm projecting. I want to give more than people expect of me. That's what's going to make people say, "Oh, I want to invest with her again and again and again."
Yeah.
It's the same, you know, same mindset.
Awesome. Awesome. Well, Ellie, really appreciate you spending time with us. And we could probably keep on talking for a while, but we do have to wrap. So, with that said, how can our listeners get in touch with you and learn more about what you got going on?
Yeah, absolutely. So, you know, you can Google my name, Ellie Perlman. I also have a website that talks a little bit about my life story and our investments and everything. And the website is ellieperlman.com. And if you go there, you can download a free guide, which is basically the 5 critical deal components that every passive investor should look into when they're looking at a deal. And of course, if you know somebody wants to reach out and talk about investing passively with my company, then they can do that on this website. There's you can leave your information, and yeah, I guess if you also Google my name and the word Forbes, you can also read my articles that are posted on Forbes as well.
Awesome. Awesome. Well, again, I really appreciate it. And man, I mean, I took some good notes, and I think our listeners probably were taking good notes too. So I think one of the really big takeaways I took from this are writing those steps down that you need to do for your business, like finding deals, step A, B, C, D, raising capital, step A, B, C, D, and so on, and really figuring out, okay, what are those steps? And then, maybe doing it all yourself to begin with, but then figuring out how do we delegate? How do we make the certain things the most important things for us, and then handing some of that off for other people so we can actually operate this thing like a business and not like this hobby, this thing that consumes our life, right? So
Yeah,
awesome stuff.
absolutely.
Awesome stuff. Well, really appreciate it. You have a fantastic rest of the day.
Thank you, Todd. It was great being here. Thank you for inviting me.
Absolutely. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.